Hello, everyone. This is Noah Rosenblatt. I am from Urban Digs, and this is going to be your Week 15 final coronavirus Manhattan market update. That's right. You heard final. I don't even want to say the word coronavirus anymore. Now that we're reopening on Monday, which, by the way, congrats, you guys made it. Let's make this reopen a good one. I am not going to do this coronavirus Manhattan market update anymore. However, so many of you guys have emailed me saying that you appreciate this weekend update. And you would like me to continue it. So I think I am going to continue the Friday end of week update. It just will not be a coronavirus Manhattan market update. I think we should get that word out of our equation and look to the reopen and think positive thoughts. Okay, so let's get right to it and see what's going on here. I'm looking at supply. We're at 5482. You're looking at a chart right now. When I first started doing this in week one, we're at 6,600. We got down to a low of 5,040 on week 9. It was a gradual decline. Since then, we have been ticking up. We probably will now see a pop, okay? So this is like mid-January right now. Think about what happens at the new year, and we go into mid-January, all those new listings that didn't list during the holidays comes on the market over the next few months. That's probably what's going to happen to our market over the next couple of months. So expect this supply number to start popping starting next week. It probably will shoot right through the sixes. We got to the high of 7,700 last year at the peak of our active season. I don't know where this is going to go, but I will tell you that I did some research and I looked at how many listings did not come on the market during the last 4 months while we were shut down, and the number was around 5,500 listings. 5,500 listings did not come on the market that should have, based on 3-year averages, since March. Okay, so how many of those listings are now going to relist? Do they all relist at one time? These are the questions that we're about to go into and find out. Okay, so let's look at pending sales right now, our measure of demand. Where did that come in at? 1716. When I first started doing this, it came in at 2650. We have been gradually declining ever since. Unfortunately, this is the low right now. I expect this to continue to grind lower. It takes time for the buyers and contracts signed to start ticking up after stuff goes on the market, right? First the stuff comes on, then the stuff goes into contract. So I would expect this to be nearing its the end of its downward trajectory. I would expect a flattening of that curve over the next couple of weeks, and hopefully pending sales will start recovering as we get into mid or end of July. This is something worth watching. Okay, let's go to my dashboard and take a look at weekly performance and production stats. I'm going to go to 1 week active, 311. Remember what I told you guys since I started doing this, okay? The weekly commentary has a thesis around, a basic thesis around it, and that is phase 1 destruction, phase 2 normalization, and phase 3 recovery. And that narrative was supposed to be passed on to your clients so that they could see how bad the market got hit. They could see that destruction starting to normalize and turn around, and they could see the market coming back. The goal of this is to give them confidence. All right. When the market was shut down, buyers had no confidence, no certainty, no transparency. There was no market. They did not know what's going on. It's like they were flying through a cloud and they couldn't see ahead of them. By providing this data to them, you are clearing the clouds and you're allowing them to see what's going on. That makes for smarter decisions. That makes more for well-informed decisions and confident decisions. And that's what you want for your buyers. And you have to explain to your buyers, all right? We're about to go into a period of time where those COVID signed deals, okay, all those COVID signed deals, I'll get to that in a second, over the last 3.5, 4 months, which is about 650 or so, those are going to start closing. So we're going to get COVID price discovery over the next 3 or 4 months. You need to explain to your clients that whatever those numbers come in at, whether it's down 10%, down 15%, or whatever, that was a market that was in place when the shutdown was in order, okay? So you can't expect your clients to have that kind of market when they see it, when they open up, okay, in a couple of months from now. There is a difference between lagging sales data and what those price trends are telling us and what's happening in the field real time, probably a 4 to 5 month lag. If your buyers expect to get those type of steep discounts when they finally show in the sales reports coming up over the next few months, you need to explain to them that that is what the discounts that buyers got when the market was shut down and they were bidding on properties sight unseen, okay? When fear was much higher. So we're in a completely different place right now, and we're going to have to see how sellers react to the bids that come in. That's what's coming up, okay? So let's go to contract sign and take a look at 1 week demand. Where are we? All right, 77, finally. All right. This is the number. This is the trend, not the number. This is the trend I'm looking for. All right. This got down to a low of 31 in week 12. You're looking at a chart right now. When I first started doing this weekly trend was 136. COVID hit. It went right down. It went down to a low of 31 in week 12. And ever since then, we've been picking up. This is the first time I'm seeing it in the 70s since about week 3 when we're on the way down. So the fact that we're on the way up, that's a very good sign. And this is what you want to show your buyers. Tell your buyers that the activity is starting to come back. Show them. And you're going to see this. It's going to go to 80, 90, 100, 120, 130, 140. So you have time and you will see the market recover and the activity come back. This is the kind of front line information and transparency that your buyer clients really need to know. So this is a good sign. Let's keep it going. Finally, off market, where we come in at? 159. Okay, that's up a little bit. When we first started doing this, you're looking at a chart right now. We came in at 424. That was when sellers just wanted a mass exodus. Get me off the market. I don't want anything to do with it. That was back in March. That gradually declined. We hit a low of 83 in week 12. And ever since then, it's been ticking up. Quite frankly, I don't even care about this number anymore. This number is noise. Anything in the hundreds or so, or even the under 100, this is noise at this point. What we really want to track is active and contract signed, okay? And finally, I want to take out one last thing for you guys, closed sales. You want to keep an eye on this because Acris and those people at the city register that file all those sales are probably going to go back to work next week as well. And we should see around 200, 300 sales being filed a week. Now, obviously, we're not going to have that type of volume because we don't have pending sales or deal volume because of the shutdown, but you're going to see this pick up. And once you see this closed sales start to pick up on a weekly basis, you know that Acris is in full swing with the filings, and it's only going to be a matter of time until you see those listing discounts and those metrics from the closed sales and the price action that everyone is just hungry for. How much are we down? Now, I did a little test, okay? I did a little research, and I asked my engineer to send me a file of all the closed sales with a contract sign date after March 20th, okay? I put this on my Twitter account earlier today. It was about 49 deals. I added them all up. The listing discount was about 14% of those trades. So those are COVID signed deals. Only 49 of them closed, not a lot of them, okay? We still have about 600 more to go, but the listing discount of those was about 14.7%. That is the earliest rough estimate I can get. It is not a full look. It very well could go, it can get better from that point. It can get worse from that point. I don't know. We got to see where those other 600 trades come in when they finally close, and these numbers are going to be pouring in over the next couple of months, okay? So get your boots on, get ready, get out there, enjoy the weekend, prepare yourself, and I wish everyone a very super active open next week. This is Noah Rosenblatt. I am from Urban Digs, and I will catch you next week. Have a great weekend. Bye-bye.